Welcome back to the channel, everybody. I am Mick Alphanim. So we're going to begin here with this article on U.Today. It's titled Ripple Lawsuit to Settle in June. Fresh speculation arises following these events. Let's read this little tidbit, see what's going on here. It says expectations regarding the Ripple SEC lawsuit seem to be bursting as fresh speculation on a resolution and the much publicized legal battle have surfaced on Twitter. Let's find out what's going on, because I have no idea what's going on Twitter. It says an XRP community member, Ashley Prosper, we've heard a lot from this individual in the recent months, so list a series of events that they think might point to a quicker resolution of the lawsuit. They refer to Ripple CEO Brad Garlinghouse's prediction of the lawsuit being resolved in weeks, not months. We've seen many people, and we have as well, speak about this on the channel as of recent. That is very interesting. I hope so. I'll take an early end date. I will. You know, I continue to say I'm staying balanced. If it doesn't happen, hey, I think it'll happen soon enough. But if it happens in June or July, so be it. I'll take it. It says the Ripple CEO also liked the comment of an XRP community member, quote, digital asset buy on the lawsuit being over. See, now this I wouldn't have known about. So let's see what they're talking about here. Let's read the actual tweet here. They have it cropped. It says, so Brad says case ending in weeks, not months. Hinman docs come out on June 13th. Brad likes at digital asset by tweet about case being over. Really? Wow. That's very interesting. Then it says Disney Elemental. Now this is something that subscribers have told me about in the comment section quite a few times. It says Disney Elemental comes out on June the 16th. It says featuring fire and water characters named Ember Lumen and Brooke Ripple. Now that is, I'm just gonna say that's just very interesting. It just is, and that's very strange, right? But I will say that, like I said, we've all seen it. When XRP goes up, XLM goes up, right? Can you imagine XRP exploding and it dragging XLM up with it, right? So that's very interesting. This individual continues to do a very, very good job over there on Twitter. So now let's move on here to another article, all right? I'm gonna try to get through a few of these today. So this article is also on U.Today, and it's titled Millions of XRP Move to Bitstamp, Sell-Off Imminent. Well, that's usually what it means, right? We shall see. It says crypto data tracker Whale Alert has spotted a massive XRP move in the last 24 hours. Whale Alert reports that 21,500,000 XRP worth $11 million, I'm just going to round it, was transferred from an unknown wallet to Bitstamp crypto exchange. Well, we see tons of XRP move around all the time. Nothing new, really doesn't make a difference. Doesn't make an impact on what it could do in the future whatsoever. The timing of the move remains significant as the XRP price has been on a tear. Yeah, so like, once again, it wouldn't surprise me if people scrape some off the top, take some profits. Has been on a tear since May 25th. Investors often move their crypto assets to exchanges for several reasons, among which is to sell them. XRP saw 6 consecutive days. I don't know why I said it like that. 6 saw 6 consecutive days of trading in green, starting on May 25th after it resolved a bullish pennant on its chart. The XRP price rose to a high of 52 cents on May 30th before slight profit taking. Yes, but you know, I checked probably about an hour and a half ago. It was still at 51 cents. That's pretty good. It's holding this ground pretty good. So on a broader scale, XRP's price started climbing after a price consolidation near the May 8 lows of 41 cents. The rise, which saw 6 days of consecutive positive action until May the 20th, was punctuated by a brief consolidation before the bulls resumed action once again. You know, a lot of this is going to be impacted also depending on whether we get another rate hike or not coming up. We'll see. And so now let's move on to another little bit of information here. All right, so now we're going to get on to a little bit of XLM related news. So Stellar put this tweet here. They had some sort of contest again. They're always doing this, trying to bring in new businesses and such. So they have their winners from that particular contest. And so here in this tweet, we're going to go through first, second, and third place to see which businesses are going to be building on Stellar and which ones we may need to keep an eye on into the future. So first place in this contest went to @Cash Abroad app. And it says, winning the panel's top choice is Cash Abroad, a cross-border payment platform for businesses in Latin America, using Stellar and Soroban. All right, so another cross-border payment system where they're going to need wallets and such like that, and transaction fees and XLM. Wallets need a modicum of XLM, so good. Anything that uses XLM, I'm all for that. So, you know, we'll keep an eye on that, and hopefully they're very successful. Latin America is on the rise right now. They're doing very well. So, you know, we'll see how this all pans out. So now let's go here to second place. And second place is a company named Ripe. It says coming in second is Ripe, providing off-ramps from crypto to e-wallets using everyday methods of payment, starting with those in the Philippines. All right, so this is good activity as well. Once again, e-wallets. So every e-wallet has to hold some lumens. I want as many people having crypto wallets, e-wallet, whatever they want to call them. I want as many people around the world having wallets as humanly possible. All right. I don't know about you, but I'm here to make some money. All right. So this could be good. We'll keep an eye on them as well. And there's more here, but we're just going through 3 of them. All right. To save a little bit of time. If you want to see the rest, you can go to Stellar's Twitter and scroll down there. You'll see them all posted there. So third place is a company that with a name that I'm not sure how to pronounce. Is it Ools? Let's just say Ools for now. Is UILS. I'm not sure the exact pronunciation, but let's get on with what they actually do. That's what's important. It says a close third. Ools is a talented team building lending infrastructure that enables banks and fintechs to offer loans to mobility gig workers using driving history as a credit score. Now, this could be a very interesting project here. There's going to be a lot of opportunities opening up in the what do they call it, ride sharing industry. And it's definitely evolving and changing. A lot of these individuals, there's a lot of new companies going to be springing up over the next few years. You know, because there's a bit of a chasm beginning to grow there, but that's a completely different topic. So we'll discuss that maybe another time if this company goes a little bit further. But yeah, so there's going to be a lot of need for lending there, of course, in my humble opinion. And then, of course, they can expand this as well. They don't have to stick with just doing lending. They can also move payroll, paycheck. They can do payroll, paychecks, things like that. Have that flowing across as well. I don't see why not. If you're already going to be dealing with them heavily, it's quite easily to integrate that sort of technology, in my humble opinion. But this is where they're beginning, right? And I like this here where they say using driving history as credit. So there's a little bit of incentive there to have a very good driving history in order to have access to this particular type of capital. So this could be something interesting to watch. You know, what do you think? You guys let me know what you think down in the comment section. But once again, we have a little bit more good activity on Stellar. So this continues to lend credence to the fact that the future is definitely a bright one. And we'll see how everything plays out, how they will actuate on all these different things. All right, so now let's move on here to an article on coinedition.com. And this one is titled XDC Network Partners with SBI Group's SBI VC Trade. And let's scroll down here and read this a little bit. It says, the open source blockchain protocol XDC Network has announced its partnership with SBI Group's crypto exchange SBI VC Trade in an attempt to establish itself as a global leader in blockchain solutions by bringing digital transformation in the finance sector. Atul Kakade, the co-founder of XDC Network, my apologies if I mispronounced the name, shared his ecstasy, okay, wait, in collaborating with SBI. That's a rather strange way to... My apologies. My apologies. That's just a strange way to express that. My apologies, everyone. I needed a laugh. It was a hard day. He shared his ecstasy. I know. Alphany wasn't even that funny. I know. Oh, my word. Oh. You can skip this part. You can skip this and go to the next chapter. So every time I read it, let me cover the screen. Oh man, I got tears in my eyes. Oh, I got to cover the screen. Every time I read it, it's just funny. Oh, you ever find something funny and it's just, oh man. So it's commenting on the vast opportunities. No, they didn't follow it up with that. Oh man, vast opportunities in Japan. Oh, let me calm down. Okay, let's be professional. Gotta be professional. Wait, quote, Japan is a crucial hub for international trade, and our blockchain platform aims to streamline this sector by improving transparency, traceability, and reducing costs. Look, I gotta get off this article. It just keeps making me laugh. Anyway, XDC is doing great. I'm super bullish on XDC into the future, right? That's all I'm going to say about that. Listen, it's on coinedition.com's front page. Go there and read it yourself. Oh, my word. That was a good time right there. Oh, man. All right. This article here is from Cointelegraph.com, and it's titled AML Rules for Digital Assets to Come into Effect in UAE. Oh, man. I got to shake off those laughs. The licensed financial institutions would be required to verify the identities of all customers. So the United Arab Emirates continues to surge forward and establish dominance. You know, look, Hong Kong is doing well as also. They're both neck and neck right there. They're right there. But I think the UAE is out front just by a little bit. They're just dominating when it comes to, you know, trying to bring in crypto companies and establish regulations and issue regulatory clarity at breakneck speeds. Let's read this little tidbit here. It says, under new rules from the Central Bank of the United Arab Emirates, licensed financial institutions would be required to verify the identities of all customers. The update will come into effect, quote, within a month, unquote, by the end of June. On May 31st, the CBUAE published guidance for LFIs on risk, quote, related to virtual assets and virtual asset service providers, unquote. A 44-page document specifies the new rules on anti-money laundering. You know, they're always going to use this around the world, whether it's in the West or the East, it doesn't make a difference. They're going to say, oh, money laundering is something bad. Hand all your information over to us. They're going to use that. It says, and combating the financing of terrorism for banking institutions engaging with crypto in the UAE. It takes into account financial action, the Financial Action Task Force Global Standards, LFIs, and the central bank's definition are all the non-crypto financial institutions establishing a relationship with virtual asset providers, VASPs, including banks, financial companies, exchange houses, payment service providers, registered hawala providers, and insurance companies. All right, so there's some forward movement there. So according to the guidance, LFI should submit a request to the central bank for non-objection to open accounts for each VASP on a case-by-case basis. Any collaboration with VASP without a national license is prohibited. So we'll try to stay up to date on this, but as of now, things are starting to heat up and move forward in the world as far as regulatory clarity and integration of the bank coin systems, utility coin systems. All right, so now let's move on to another article. This article is titled, Coinbase CEO cites rising threat from China and fresh plea to U.S. officials. I don't think you need to plead with them. Well, let's see what they have to say. It says, China is set to benefit from restrictive crypto rules in the U.S. Yeah, they did it to themselves. Everyone's making a push. Everyone's fighting. And I think Coinbase, you should have been pushing a long time ago. Now you're doing this because you're under attack by the SEC as well. But you could have made a push long ago, just like a lot of other big companies could have fought back. But the U.S. has done this to themselves. And a lot of money goes into the pockets of certain individuals in the U.S. where it's beneficial for them to take actions that are damaging to the U.S. So that's just the way that it is. I don't think that your pleading with them is going to change anything. This is just a fire that everybody's going to have to wait to burn out, to be completely honest. It says restrictive crypto rules in the U.S. that are inadvertently driving innovation offshore. Sure, yeah, that's going to continue. Like I said, and a lot of entities within the U.S. benefit from that. Says Coinbase CEO Brian Armstrong wrote in an editorial published by Market Watch on Tuesday. What you need to do is just continue to fight. And hopefully some people have enough, capital and guts to fight a lot of the corruption also that is within the U.S. That's a huge problem. And that's one of the reasons why this type of thing is occurring, why it's happening. Quote, the U.S. and other democratic nations are up against a digital systems promoted by an ambitious adversary. It's an adversary. And I love this divide and conquer that they do. This is an adversary, but you get most of your products from them. This is an adversary, but a lot of your politicians allegedly are receiving monies from them and working hand in hand with China. But this is your adversary. It's unbelievable. These mental gymnastics that they perform. If you disagree with what I've said, I can completely respect that. But that's facts. What I just spoke is facts. When he says, and I can respect you disagreeing, no problem. Says Armstrong wrote mentioning the Alipay and Tencent payment systems. And all of these countries have their own problems. All their financial systems are struggling right now. You just take a little bit of research and you'll see that. They're all propped up, every single one of them. It says, quote, with the recent launch of its digital yuan, China aims to directly challenge the US dollar and its role in global commerce. Well, no, not via the digital yuan. Don't get me wrong. The yuan is being used in more trades, I think, now than ever, more than I've seen. But no, what would threaten the dominance of the US dollar is, firstly, if Saudi Arabia formally becomes a member of BRICS, that's number one. Number two, if they come out with that common BRICS nation currency. Now, that's what would threaten the dollar. I think all the countries know that, not the yuan, right? And I don't think China wants that. The yuan right now, in my humble opinion, is just being used as a placeholder until the common BRICS currency that will probably be backed by gold or some commodity comes out, if they ever get that done. As Armstrong said, it should come as, quote, no surprise that Hong Kong has been positioning itself as a new crypto hub. Of course, they want to win. Everybody wants to win. Who doesn't want to win? You see a new technology out there and it can make you lots of capital. It can give you transparency, traceability, all these different great things. Who's going to pass up on that? Right? Says his comments came amid a flurry of speculation that China would be warming to the sector after state broadcaster China Central Television broadcasted a segment about cryptocurrencies that featured the Bitcoin logo earlier this month. Well, what are you talking about? I always have to look at with a side eye and say, how much do you really know about China? Right? Because you're saying Hong Kong, but I keep iterating this. Hong Kong is very different than mainland China. It just is, right? Let's continue on here. I'm not going to go too deep in that once again, but it just blows my mind every time they make this conflation. They just don't understand a multipolar dynamic within one system. It says Hong Kong's Securities and Futures Commission, meanwhile, last week released conclusions about proposed regulatory requirements for virtual asset trading that are set to become effective on June 1st. Well, let's see, and this is what I'm talking about here. Let's scroll back up. Up here, they're talking about the yuan, but down here, they're talking about Hong Kong. But they don't mention the Hong Kong dollar. You see what I mean? It's just this information. It's like they're covering something that, and I'm not the most informed about all of this stuff, but it's like they're covering things and they're bringing up worries and concerns to support their arguments and stoke the fires in some of these policymakers in the U.S., but they're not completely informed on the dynamics within China, right? So the information is not being wielded in the correct way, in my humble opinion. So we'll see what comes out of this. If maybe something does come out of this, and maybe Coinbase does make some waves and get something started. But as of right now, it looks like the bulk of those politicians in the West and regulators are still holding firm against crypto. You have a handful that are actually pro-crypto, distributed ledger technology. So, we'll keep an eye on it and we will see, right? See if they do the right thing. So now, this article here is from fxstreet.com and it's titled, "An extended period of US dollar depreciation is approaching." This is coming from Wells Fargo. We will see, and that would be nice because if the dollar gets a little bit weaker, everything else can run, everything else can play. But as you saw today, when that dollar was strong on the DXY, you saw everything get red for a little while. Well, not everything, but most things get red for a little while. So it says here, economists at Wells Fargo expect US dollar depreciation to be modest during Q4 2023, but pick up pace over the course of the next year. Greenback could be relatively stable in the near term. Quote, the greenback could be, why do they do that? They make the headline the first sentence of the next paragraph. It says, as some additional tightening, Fed tightening combined with the potential for mildly unsettled markets could provide temporary support for the greenback. However, we expect the U.S. currency to eventually come under pressure as aggressive Fed easing starts from early 2024. All right, so we'll keep an eye on that and we will see how that plays out. So I want to read this a little bit here. This is from unheard.com and it's titled, Recession in Germany is a sign of Europe's deindustrialization. So I was talking about the recession the other day in Germany, and so I figured I saw this article pop up. Why not cover it, right? It's good information to have to understand that the what is going on economically in certain places within the within Europe. So it says here. Last week, Germany announced that after the government statistics agency revised its recent GDP figures, it was clear that the country was in recession. In recent history, it has tended to hold up well as the global economy softened relative to some of Europe's weaker economies. But this time, it seems that Germany is leading the pack into recession. This is because the recession that is currently looming over Europe, this is what I was talking about the other day, is fundamentally different from previous iterations. The coming recession is no simple turning of the business cycle. Instead, it could be the beginning of the deindustrialization of the European economy, which no longer has access to cheap Russian energy. Since chatter about deindustrialization started last year, there has been much confusion on the matter. Some appear to think that deindustrialization would mean the instantaneous closure of energy-starved European factories and mass layoffs. Others assume that the crisis was over because energy futures prices have fallen in recent months. Deindustrialization is not something that happens overnight. Rather, it is a gradual process whereby European industry becomes less competitive on the global market. As higher energy costs are passed through in the form of higher prices. We saw something similar happen in Britain in the 1990s, as many factories shut down and few reopened. But the potential deindustrialization of Europe will probably be more rapid than the British example. As for energy prices returning to normal, this seems unlikely. Last week, head of Britain's energy regulator admitted that energy bills were unlikely to fall to pre-crisis levels for at least 2 years. By all accounts, the regulator is likely being optimistic. Qatar's energy minister warned around the same time that the, quote, worst is yet to come, unquote, for European oil and gas shortages, which obviously affects everything, right? He would probably know since Europe is relying heavily on Qatari LNG imports for their energy supplies. All right, we're going to stop right there. I think that brought a little bit of clarity to the situation in Europe. More particularly in Germany, right? But this is going to be felt everywhere if what they're saying is true. So once again, if you want to read the rest of this article, it's a very extensive article. It's on unheard.com, unheard.com. All right, so now let's move on here to another article. So this article here is from NASDAQ.com and it's titled, A House Bill Would Make It Harder for the SEC to Argue Crypto Tokens Are Securities. It says, what would the Securities Clarity Act change? It says the bipartisan bill, which Representatives Tom Emmer and Darren Soto announced in May, would clarify and codify that an asset sold or transferred pursuant to a fundraising transaction deemed an, quote, investment contract and, unquote, and that is not otherwise a security does not become a security just because it was sold or transferred as a part of a securities offering. That's if it was even a part of a securities offering. A version of the bill was introduced in 2021. The bill essentially distinguishes between an investment contract transaction, which is a securities offering, and the underlying investment contract asset, which is often not a security like the orange groves in Howie. This means that the token offered as a part of an investment contract would not need to transform into a non-security. It would be a security. It would not be a security in the first place. The distinction is important because today, unlike the initial coin offerings of the past, many development teams that are interested in launching a token in the US raise funds in SEC compliant securities offerings using Regulation D offerings, an exemption from SEC registration typically associated with a public offering. In these private offerings, rather than sell to the public, issuers sell to accredited investors who acquire future token interest through purchase agreements. Everything always drives it back to the legacy system, doesn't it? Unbelievable. That call for token delivery upon regular people can't get rich anymore, huh? SEC. Right. That's very interesting. But they claim that they're protecting the regular people. Be careful of people that always come to you telling you that they're going to protect you. We're here to help you. We're here to protect you. It's your safety. Like I can protect myself. Because they typically don't have your best interest at heart. And they're going to use danger and panic to control you. Sometimes they use danger and panic to attract you as well. You get that adrenaline rush, and they know every time they can present you with some danger, something extreme, you get that adrenaline rush, you want some more. Adrenaline is addictive. Be careful of that. I mean, you do what you want, but I would be careful of that. It says, that call for token delivery upon certain conditions being met, such as network or protocol launch. The key question for these projects is not whether a security can, quote, transform into a non-security. It is whether a token can be packaged in a multi-stage agreement involving a securities offering without itself becoming a security. All right, so now let's move on to another article here. So this article here is from FT.com, financialtimes.com, but FT.com if you want to see more of this here, this type of information. It says here, turmoil among U.S. banks has depleted the government-backed fund that protects depositors. It doesn't protect all depositors. I'm going to tell you that right now. It says giving it the least firepower in almost a decade to cover losses from future lender failures. So this is going to be a big problem, but let's continue on here. The Federal Deposit Insurance Fund contained $116 billion in assets at the end of the first quarter, down $128 billion at the end of 2022. According to the data released on Wednesday, the ratio of assets to insured deposits in the U.S. banking system fell to 1.1%, the lowest since 2015 and less than the minimum of 1.35% required by law. The deposit fund's depleted finances follow a period of turmoil for U.S. regional lenders. The failures of SVB and Signature Bank in March cost the fund $20 billion. The first quarter figures do not reflect the subsequent failure of First Republic, which cost the fund another $13 billion and would make the fund's finances look even worse. The number of banks on the Federal Deposit Insurance Corporation's so-called problem list stood at 43 at the end of the first quarter, up from 39 at the end of the year, the agency said as it released the data. The FDIC discloses the number of banks on its problem list, but not the names. The FDIC reported the updated fund data as part of its quarterly banking profile. The agency also confirmed that total profits of U.S. banks neared $80 billion at an all-time high in the quarter, as the Financial Times reported earlier this month. Deposits at U.S. banks dropped by nearly $500 billion in the quarter. That was the largest decline in almost 4 decades on an absolute basis, but represented just 2% of the nearly $17 trillion in U.S. deposits. It says, quote, despite the recent period of stress, the banking industry has proven to be quite resilient. The propped up banking industry is quite resilient. Are you sure about that? This is said by the FDIC. Of course, the FDIC is going to say this. FDIC Chair Martin Gruenberg in a statement. Really? So all the unrealized losses that hang over your head like a guillotine. The commercial real estate that hangs over your head like a guillotine. All of the uninsured deposits, which are huge, hanging over your head like a guillotine. That's resiliency, that's stability. And we will see. We'll see. Maybe I'm wrong. We'll see. All right. So now let's go on here. This article here is from businessinsider.com. And it's titled, A Wave. It says, Layoffs Sweeping the U.S. A wave of layoffs that hit dozens of U.S. companies toward the end of 2022 shows no sign of slowing down in 2023. Binance, one of the world's largest cryptocurrency exchange by volume, is the latest company weighing potential layoffs as it prepares for the next bull cycle and reconsiders, quote, talent density across the organization, unquote, a spokesperson told Insider. The news comes a week after JP Morgan Chase announced it will slash about 500 jobs across several divisions, and on the heels of recent layoffs at companies including LinkedIn and Shopify. These companies join a large number of major corporations that have made significant cuts in the new year. Tech companies including Meta and Google and finance behemoths like Goldman Sachs announced massive layoffs in the first weeks of 2023 amid a continued economic downturn and stagnating sales. The downsizing followed significant reductions that companies including Meta and Twitter made this last year. The layoffs have primarily affected the tech sector, which is now hemorrhaging employees at a faster rate. Wait a minute. There's massive amount of banks closing. I don't know if they're going to put this on here. Massive amount of banks closing. Obviously, there's jobs that are lost as well. And they're not coming back. You have a massive amount of what are those stores called? Walmart. Massive amount of Walmart's closing and a lot of other stores closing as well. Put those on here. I mean, maybe tech is the biggest. I mean, but they're not the only ones. I'll tell you that right now. According to data cited by Journal from Layoffs.fyi, a site tracking layoffs since the start of the redacted, tech companies slashed more than 187,000 in 2023 alone, compared to 80,000 in March, December 2020, and 15,000 in 2021. All right. So now let's move on to another article here. We'll try to stay up to date on the whole layoff situation, which if they continue to raise interest rates, that's just going to continue. So this is from kitco.com. Is a little bit of gold news. I love gold. I do. I'll tell you what, just not even just holding it and storing value in it and you know, gold having obviously a very bright future ahead, in my humble opinion. But I like looking at it. I like looking at gold. I do. It's just a beautiful material. I like platinum better. And I like silver as well. But gold, I like gold best. I don't know why. It's just beautiful. Anyway, let's get back to the article. So it says, the article is titled, Gold is back on its way to 2,000 an ounce driven by safe haven demand. I'm never worried about gold at all. The future, because of harsh economic circumstances, you heard me say this before, banking problems, lack of trust in the banking system, things that may occur in the future as we head into what could be, I call it a light version of depression. We could be moving to a medium version of that. Some people are calling for a severe depression. We will see how this all plays out, but that will drive people into gold. But we'll stay up to date on it. Nevertheless, we're sitting nice right now, in my humble opinion. It says, the gold market is seeing a solid bounce from Tuesday's drop at a 2-month low as the precious metal continues to outperform the broader commodity index. In an interview with Kitco News, Ole Hansen, head of commodity strategy at Saxo Bank, said that gold's 3-week correction has ended and the market is on its way back to above $2,000 an ounce, even as weak commodity prices signal growing recession fears. Yeah, so that's in play as well. Not to mention, always remember that these banks are buying record amounts of gold, record amounts. It says Hansen's bullish outlook on gold comes as the Bloomberg Commodity Index has dropped 13% this year, led by silver, copper, and oil. Meanwhile, gold prices are up nearly 6% this year. This is what I'm talking about. We just came off of all-time highs, last trading at $1,972.70 an ounce. Hansen said that although weak commodity prices could cool down inflation pressures In the near term, renewed safe haven demand remains a healthy driver for gold. Yes, I agree with that. Quote, commodities are struggling because of the economic outlook. If the economy is as bad as commodities are pricing in, then the Federal Reserve cannot raise interest rates indefinitely, unquote, he said. Quote, in this environment, gold prices can easily get back to $2,000. I agree with that. And $2,000 an ounce. We are not out of the woods just yet. A move back above $2,000 will definitely improve sentiment. You know, like I said, I always feel good about gold. It says, although gold prices have struggled, these are spot prices, although gold prices have struggled to hold gains in the last 3 weeks, Hansen said that the correction was inevitable. He added that gold investors were out of tune with the Federal Reserve as they were pricing in significant rate cuts by the end of the summer. Now, I'm going to pause there. I know a lot of people think about gold and say, well, gold's price is going up. They think about the prices going up. But I think a lot of people like myself, we're just looking at it as a store of value. Although, yeah, the price could go up. It did go up a lot since last year, a lot. But it's more of a store of gold vehicle than it is something where you're just trying to make insane gains. You can sell NFTs to get insane gains. You can move some crypto to get insane gains, you know. But gold is very protective. I look at it as a defensive thing, a balancer of sorts. That's how I look at it, a protector. So now that you have that information, what are you going to do with it? I'll say this also. I like silver bars. I like gold bars. I don't like coins. Like they have all these coins coming out now with like pictures on it. There was like superhero pictures on these particular things. I know silver has a lot of these types of things going on. I'm not sure about gold. I'm pretty sure gold does as well. They have certain things like that. I do not like that at all. Give me a gold bar any day, silver bar. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.